Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the impact of high inflation rate and the depreciating Naira on your savings and investments. We have continued to emphasize the impact a high inflation rate and depreciating Naira can have on your savings and investments. This is to encourage you to take action, if you have not, to optimize your savings and investments while preserving your capital. Last week, the National Bureau of Statistics (NBS) published Nigeria's July 2023 Consumer Price Index (CPI), which showed that headline inflation rate rose to 24.08% year-on-year from 22.79% in June 2023. This is the highest inflation rate since November 2009. The year-on-year data measures price changes between July 2023 and the corresponding month, July, in 2022. The rise in the headline inflation can be attributed to both increases in the core and food sub-indexes. Some of the significant factors are discussed below. A. Core inflation. Core inflation, which excludes farm produce and energy prices, rose to 20.5% year-on-year in July 2023 from 20.1% in the prior month. This is the highest month-on-month increase since May 2016, driven by higher transportation costs on the back of price increase in petrol pump prices. The sharp rise in the petrol prices has led to a 30% decline in fuel consumption to 46 million litres per day in July 2023 against 67 million litres per day in May 2023. B. Food inflation. Food inflation rose to 26.98% year-on-year in July 2023 from 25.25% in June 2023, driven by a sharp increase of 3.45% month-on-month inflation in July 2023 versus June 2023, the highest month-on-month increase since June 2010. This can be attributed to higher food transportation costs. Transport price sub-index rose 26.3% year-on-year, the highest among the sub-indices, due to the removal of the petrol subsidy. Also, imported food inflation rose 19% year-on-year due to the depreciation of the Naira at the I&E FX window, now Nigerian foreign exchange market, and the parallel market. Moving on to the FX market, the pressure on the Naira has persisted due to the limited supply and increased speculation. However, the statement from the acting CBN governor cautioning speculators and NNPC $3 billion emergency loan from Afrexim Bank, which boosts FX supply and creates a breather. Since the liberalization of the official FX market on the 14th June 2023, the Naira has depreciated by 36.2% to 739 Naira 52 kobo per dollar as of 18th of August 2023 from 471 Naira 67 kobo per dollar on the 13th of June 2023. Within the same period, the parallel market depreciated by 12% from 757 Naira per dollar to 860 Naira per dollar. The long-term solution to increasing our FX flow is to expand our exports, especially value-added products beyond crude oil, while short-term fixes like attracting FPIs, securing FX loans, attracting remittances to the official channel, and enabling importers of some 41 items restricted to access the official FX market may create short-term reprieve. How does high inflation affect you, and what should you do? If you kept 1 million Naira in your savings account without investing in the last year, the savings will be worth 759 Naira in real terms today, signifying a loss of purchasing power of 241,000 Naira. Basically, the 1 million Naira is worth 759,000 Naira in terms of goods and services it can buy compared to a year ago. However, if you have invested in a fixed income instrument, even at 10% per annum, the loss in purchasing power will be reduced by 100,000 Naira. This focus should be on how to reduce the impact of inflation on your savings by never leaving your money idle, even if the potential return will not completely compensate you for the high inflation. You can invest in fixed income instruments like federal government savings bonds, federal government bonds, and commercial paper with low risks and better returns compared to treasury bills. You can listen to our podcast on federal government savings bonds, link inserted, to understand this opportunity. How does a depreciating Naira affect you, and what should you do? In addition to inflation, the depreciation of the naira reduces the worth of your savings in dollar terms. With the persistent decline in the value of the naira, it's advisable to have a significant portion of your investment in dollars. You can invest in a fixed income dollar fund or mutual funds to add value to your dollar savings rather than leaving the funds in your domiciliary bank account. The potential interest rate varies between 3% and 7%. And for investors with moderate to high risk tolerance, you can consider foreign stocks with solid fundamentals and exchange-traded funds (ETFs) with a long-term focus. Kindly listen to our podcast on investing in dollar-denominated assets, link inserted, to understand the investment process and the opportunities. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.